Alright, what's up, y'all? So, in the last video, we kind of talked about the difference between investing and speculating. And in this one, I just want to go a little deeper. Because it's people who think they're investing and they're still losing money. And so, I want to make this video about 3 reasons why most people lose money investing. And so, the first thing is that they chase hype instead of value. Okay? Most people don't invest. They're just reacting to what other people say and what the market's been doing. And so I feel like they see something online, trending online, and jump in just because everyone else is. So like Dogecoin, meme stocks, or AI stocks, or whatever's pumping that week, thinking it's the next big thing. But real investors, people like Warren Buffett, they do the opposite. They buy when no one's talking about it, when prices are boring, when it's flat, when it's going down, when it's being ignored, when it's down 50% or more. But that's because that's where value lies. And so as long as the business is still in an up trajectory, the price is disconnected from the actual business. And that's what real investors look for. And so that's the point I want to make. And so the next thing is that they don't know what they own. And so people buy things that they don't understand. And I mean really understand. They hear the name and they like the story and that's it. But I feel like if you can't explain how something makes money, you're not really investing. You're just guessing, So like if you buy a stock, do you know what the company actually sells? Like if you buy a crypto, do you know what role the token plays in the system? Is it a utility token that's needed for the system to work? And so one thing I like to remember that Buffett says a lot is that risk comes from not knowing what you're doing. That's where the risk comes in. And a lot of people think investing is like gambling, is speculating. But in the last video, investing versus speculation, I showed the difference. But people still lose money when they do invest, when they try to invest. And they think it's risky because it is. But risk comes from not knowing what you're doing. And that's something that Buffett says that I like to keep in my mind. And that's why real investors study before they spend, study before they make investments. They know the ins and outs of the business, of the asset, of whatever they're buying. And the next thing is that they panic when prices drop. This one kills more wealth than anything. Selling. Just because the price dropped. Like I said earlier, the price in the business or the protocol that's being used is disconnected in the short term. In the long term, it'll go more towards the intrinsic value of the asset. But we'll talk about that in a different video. But people think losing money means the price went down and people think losing money or the price going down of the stock is the same thing, and it's not. You only lose when you sell. Okay? Every investor faces red days, bear markets, declines in the market. It doesn't go up. It doesn't just go up. And so you need to be able to stomach that. You need to have the right temperament, the right conviction, but that comes with just knowing what you're owning and being happy and being able to buy more of a good thing, of a good business, of a good protocol, of a good asset. And so, like, for example, the people who held through the 2020 crash and then kept buying, they made the most money when markets went back to normal, when the lockdowns were over. So I just want to kind of recap that. Number 1, don't chase hype. Number 2, know what you own. Number 3, don't panic when it does drop. And that's really how you stay in a game long enough to win and not lose money. And so, yeah, that was pretty much it for this video. going in a little deeper on investing and a little bit about speculating, but mostly why most people lose money when they do invest, and some ways you can avoid it. And so yeah, that's all I really want to talk about in this video, y'all. Peace.